Hello guys and girls, and welcome to episode 2. And in this episode we're going to be talking about the longer term approach and holding trades for longer term in pattern formations. Now this has been something that's been requested and another thing that I've been testing for a while, and it's congruent with the 90% rule. Learning how to hold these longer term approach requires a different style in management, and it's all to do with completions of patterns. You need to know where to manage, why we manage it in a certain way, and do we use it on the same capital or we do it on separate capital. These are the common questions that I get a lot. So what I've done is created this quick tips for you, showing you some examples how to do that and how effective it can really be. So what we'll be doing is forecasting the completions of these patterns over the course of weeks and months sometimes. And I've been testing this, of course, alongside the 15-minute chart. A combination of the 15-minute chart and the longer-term approach is just the evolution of the Falcon strategy that will drastically improve your returns. And I cannot wait to dig into this episode. So again, I highly recommend that you take notes and you watch this over and over. And with the implementation of this longer-term approach and the shorter term, I've seen the capabilities and the percentage that you can add is just crazy. So let's dig into the longer term approach, and I want to show you a few examples. Before we begin, it's important to understand that the longer term positions can either be held on your current account or on separate capital. It's best, through my experiences, to have it on separate capital rather than your regular trading account, and that you can create this as a habit regardless of how much capital you have. So let's say, for example, you're a demo trader and you've just started, or you've only have 1,000, 2,000, 5, 10,000, whatever it may be, and you're thinking I don't have enough capital. It's more so having that habit. Even if you have a small amount, it's absolutely fine. Now you can of course trade this on your normal capital. That's okay as well. You just need to realize that when you're trading the longer term approach, some trades that you take, you're going to need them to pull back quite deeply, so you have to be comfortable with that. So through my experience of having that extra capital on the side, it's a lot easier to kind of just leave them, because some of the trades you're going to leave them for 3 weeks to a month, some of them they're going to be 3 months to 6 months, right? So if you want to be managing those on a micro basis, it's going to get very, very emotional. So just something to think about as well. So the management on the longer term holds is really what changes everything with this approach. We're still going to be looking at the same Falcon style. It's purely really the management of how we're leaving it, when to be aggressive with it and when to be just completely open. So we're not going to, of course, take these trades on the 4-hour chart or anything like that. We're going to be taking them the same on the 1-hour chart, not like a lot of other kind of swing style strategies. This is very Falcon precision entries. It's more so the management and the patterns that we're looking at. Now we've seen a lot of these longer term patterns play out within Falcon that have been forecasted months and months in advance. All we're doing now is just executing on these positions, holding them and anticipating the full move to play out and when to take a message from the market to then close those down as well. Patterns are the basis of this new strategy, and as we forecast these completions and things like the 90% rule to increase the strike rate of our forecasting, it's going to be truly a game changer. So what are the precautions that we need to have on the longer term hold? So just something to note down. Be prepared to experience a much deeper pullback, and note the emotions that could be involved if you let them. So if you imagine some of these trades, they're going to pull back by 10%, and you have to be able to deal with that if you're going to take that extra longer term approach. It comes down to really just accepting the fact that you're going to hold through the deeper pullbacks. It really is that simple. Now, depending on the position and how far it is into the move, you may see pullbacks, like I mentioned, up to 10%, sometimes 15%, but keeping in mind the overall target of the trade can be near 40, 50, 60%. So you have to appreciate, if you want to reap the rewards, you need to be willing to wait and be patient for that. And also note that not all of the trades are going to be a longer term hold. Maintaining that aggressive, semi-aggressive management style and being able to be involved in these trades, sometimes we're going to have a longer term approach. The market changes. It's not always 100% right. So you need to realize that some of these trades that we expected to make, let's say 30%, They may pull back deeper than we expected. The pattern changes. We get a message from the market, and then we walk away with 10 or 12%. But you have to realize there's no risk on that part. So the moment you start getting emotional about that is when you know that greed's coming in. Imagine having 4 or 5 trades, and on average you're banking 15%, 20% sometimes a little bit more. How would that account for the rest of the year? How much extra would that evolve in your trading account? You're talking maybe a potentially 60 to 100% extra onto your account by just leaving that longer term approach. So yes, we deal with the deeper pullbacks, but at the same time, it's very passive. You sit back, relax, let it do its thing. You just manage it on a weekly basis, which I'm going to cover, and you just let these patterns play out and just accept the fact that some of them won't always complete, but the majority of them will, which I'm about to show you. So guys and girls, let's get into the charts. So as you can see, firstly, very, very important to have a separate watch list. So what you can do is have yearly forecasts. That's exactly what I do. And I found that way there's no confusion. You've just got your yearly forecast. You keep it simple and you know, right, these are the ones that you're going to forecast from a longer term perspective. So keep it simple in that respect. Now, when it comes to taking these positions, having that separate folder is also key as well. So what I'm going to quickly show you is that if you want to understand how these patterns behave in the future, of course, I want this to be sustainable for the future. What you can do is you can grab this tool here, called bars patterns. Now you can find this bars patterns in here. So into this drop down here. So you can just favorite it, keep it simple. And what this does here, if I just show you, so if I click on this to here, what does it do? It replicates this move. So you can drag that out like this, and you can even draw on the patterns using trend lines like this. So you can draw on the chart, create the pattern, and then you can save that. So you can save that somewhere and put it in a separate folder. Now this is of course optional, but what it does is it just gives you something to reference to keep it simple as possible. And what you can also do as well, just to get that kind of visualization of what these charts look like, you can go to this recent move, go to this impulse, put it there, and see that move playing out. That just gives you an indication of what you're looking for. So when you're looking for the longer term approach, that's just one little tip. So now let's start off with USD CAD. So if I'm taking the longer term approach, what am I really looking for? Well, essentially, I'm anticipating that next impulse. So as we can see with this chart, impulse, correction, and this is a great example because this is what we're looking at right now. We're anticipating that this will get to the beginning of the correction with the 90% rule. So if this breaks this chart here, impulsively, if we get an impulsive break, then we know we have a 90% chance we'll get to the low. That's where we have to be completely open. Now with USD CAD's behavior, you can see a lot of these trades, they don't really pull back that deep. Some of these patterns, they're that clean that we don't even have to experience that deep of pullbacks. So if you remember this chart that we was looking at here, for those of you that have been in Falcon for a while, as long as it's broke impulsively, which it did on the daily and the weekly, we then have a 90% probability we'll get to that low. And as you can see, we did, and then we went a little bit further. So that's what we're targeting here. It's this section. The 90% kicks in here. So essentially, the 90% kicks in here for this move. So now we know where the patterns go to. How about something like, how do we get involved in it and how do we actually capitalize on that on the way down? Well, let's go back to this particular trade here on the 1 hour chart. So if we go back to this trade, so as you can see here on the 1 hour chart, we're looking at the top of the structure. This ray line here, this is where the 90% rule meets. So essentially, you'll be taking the trade from the top here, and how you're managing these trades is a little bit different to how you would manage normally. Now, it has a slight similarity. So for example, when we're at the top of the structure, we know in terms of management style, we don't need to be super aggressive at the top. We can wait for the market to play out before we start moving it. This is why the break-even method, we don't utilize it as much at the top or the bottom of the structure, because we know the chart can just trickle its way up and it can just hover around before it actually commits to itself and breaks. So ideally, you want a clean structure to form a break of that before you move it to break even. Now, the easiest way to manage these type of trades is, of course, letting them play out and just be completely open, almost in a way that you just slightly forget about them. How I manage them is on a weekly basis, and I'm going to be mentoring you guys and girls on a weekly basis to help you do that. Patterns are not so simple, so I'm going to be helping people out as the trades that I'm actively in, so we know exactly how to manage them, and then you're going to learn through experience. There's one thing me showing you it, but at the same time in a live market, it's going to be super beneficial. So targeting here, first 15-16%, and then the longer term target for 30%. Now, when we go into the 1 hour chart, well, you might think, so how do I manage it? Well, previously, if you're taking the trades from the top of the structure, like this, you're going to get to at one point, 3.5% before this then starts to pull back. So would I get taken out for a couple of percent or break even? Well, in this type of situation, what you do is you have to wait for its first structure. So its first structure that we can see is here. This is the first clear correction. Once this has created its structure and it starts to commit to itself, then we can start locking in a tiny bit of profit, but we're doing it structure based. So we want these clear structures to play off. So for example, when you're looking at a structure, we're utilizing a simple measuring tool. And once we get a break of this, so once we see price down here, we can then move it to this area here. So we wait for price to get down here before we then start moving it, because we're utilizing the pattern here to resemble exactly where we'll go within the market. Now, when we're seeing that, we're not being very, very aggressive. As you can see, it's a much more open approach. And then when we get to the trend line down here, this is when it gets interesting. So remember, the 90% rule is from here to here, because we're anticipating we'll get an impulsive break on the weekly or the daily, and then we're going to just leave this open. In this situation, this was pretty easy to manage, purely because we had not much pullbacks in those situations. It was pretty easy to take advantage of that. Sometimes there's going to be deeper pullbacks, but with these trades, a lot of them, they just take off. So when we're looking at these structures and we're getting in on these corrections, essentially this is a hover on the trend line. We're getting in at the top of the structure, just as a normal Falcon entry, risk entry, 30 pip stop, and then we're holding that trade all the way to the 90% rule. As you can see, hit target for 26%. Now, what do you do in these situations? Again, you just leave it. You just leave it open, and you have to have cutoff points. So in the sense that, what would be a message from the market? Well, what I would recommend is that when you're taking these trades and you're leaving them, you need to deal with a maximum of a 15% pullback. If you're not comfortable with that, then you're going to find it very difficult. Now, that can't be so generic, because as you can imagine, 26% here, 15%, of course, when you're in 10% here like this, if that pulled all the way back, then you'd be at break even. It's just unlikely that that will happen. You just need to realize that sometimes you're going to be in, let's say, 20% profit, and it pulls back to 10% and then continues on the way down. But we've seen with these particular types of corrections, 90% of the time they hit target. So you need to take comfort within that. Now, of course, we're going to still be trading the Falcon way, so I'm still going to be taking these trades along the way. And if you imagine just one trade makes you 26%, how much do you think that you'll make on these corrections, trading the 1 hour, trading the 15-minute? It's crazy, all the way down here. So we've got our first trade at the top, we have a hover here, we've got corrections within here, we've got corrections within here, and then we take this all the way down. Multiple positions for us to capitalize on. So bear in mind, when you're taking these trades, you will also be trading them on the 1 hour and the 15, exactly how we do within Falcon. It's just having that longer term approach. So utilizing the 90% rule, keeping it simple, knowing when the 90% rule is in play is, of course, as you can see, impulsive close here on the daily. We would know that from there, moving on the way down. But essentially, we know that even in advance, because we're expecting this big impulse correction to the low. Now, these are the kind of patterns that you want to trade the longer term approach the most, because they're very, very clean. Impulse, correction, big continuation flag, 90% of the chance that it will get to this low if it breaks impulsively, which we did. So keep those ones as simple as possible. And if we can see the replica of what's happening here, I'll be doing exactly the same. So we're already in this one, so this is a great example of holding this to the 90% rule. Holding it down here as a minimum, we have a 90% probability. But from here, the 90% kicks in as soon as we break impulsively on that channel. So as soon as this closes, if we get a impulsive close, let's say on the daily or the weekly chart here, like this, and that drops out, then we have a 90% probability that will go to here. And I think that we'll get a similar type of move like this, where we won't get that many deep pullbacks. As you can see from there, it's pretty just impulsive the whole way. and we'll have lots and lots of positions. So be ready for this one, guys and girls, because I do think that we're going to get a lot of opportunities. Sometimes this can go up and form a correction like this, but ultimately that structure, as we've seen, will drop and we'll be able to capitalize on that. So that's what I'll be utilizing for the longer term approach as well on USD CAD. As you can see, very simple, and the only thing that really changes from this perspective is just your management. You just need to be willing to let it run, and it's really as simple as that. And we've seen a lot of these ones play out. Now what I want to do is just show you a couple of variations of examples of things that they look like an ascending channel, but in the sense that you might have to be a little bit more relaxed because there's a few variations. And of course, I'll be coaching you guys and girls in the live market with the months to come. Now, there's also a couple of approaches that I do want to show you for a short to medium term. So ones that will hold for, let's say, 3-4 weeks, not months and months or anything like that. So let's dig in. So here we have pound dollar. So this is another one. Of course, we've been trading from the top here, looking for that longer term approach. These are the variations. See, with pound dollar, we have a 90% chance that we're looking at this coming to the low at the beginning of the correction. So the question that we always have to ask ourselves, where is the beginning of the correction? Well, we can see on USD CAD, it's very simple, isn't it? Because it's a very typical just impulse correction targeting the low of that correction. This, however, is just an ascending channel. It's just a larger ascending structure. It's not the same as the USD CAD trade. It's not the same pattern. And as you can see from here, we have, of course, our impulse correction. It's not the same as that. As you can see, these just have very high probabilities of impulse correction, impulse correction, impulse. Now, in this situation, this is just a larger correction. So we have an idea that this is the low of the correction, but we need to take a message from the market. How do we not know that this is the low? And the reason why I've been looking and thinking about this is because of this. We can go back to what we utilize in Falcon, which is pattern separation. If we just evolve that ever so slightly to this, and we look at this structure, and we bring this in to here, that's still a pattern, right? If we bring that in, and then we focus on this pattern, which is a clear pattern, essentially, we could argue that that is a particular structure of its own, and that what we are at right now is that we've already done the 90% rule and broken the low of it right here, very, very close. So essentially, we've already hit the 90% rule. These are the variations. Because we're dealing with a larger pattern and a larger structure here, that's when you have to take a message from the market and realize, well, we know that there was a possibility that we wouldn't get all the way to the low, but we know it's a very high probability we'll get to the beginning of the correction. And where is that beginning of the correction? This is making a lot more sense now. And especially if we combined it with this wick that we're getting here and this momentum, this descending structure, this could be the point in which that we evolve into that type of pattern and we get a much larger structure like this. And then this becomes the move longer term to the upside to create those new highs up here, which would make sense now when we're looking at that structure. The only variable that would change this, like I've been saying for a while, is if this move becomes very corrective. So then we get an ascending channel at the end, and we know that if we have an ascending channel at the end of a descending channel, this could break down like this, tag the low, and then we start to move to the upside. So as you can see, only a few variations there. So what are you going to do when you're managing that longer term? How would you deal with that? Well, if we go to back to this chart, looking at the top from here, knowing that it's more about having either a completely open approach or more of a semi-aggressive approach. So what I mean by that is, firstly, what you do is that when you're trading this, we have the angle of the channel here already. You're minimum targeting these areas here, and you're not locking in any kind of solid profit until we get a solid break below here. The short to medium term to play it is these patterns. These are going to be the ones that I think will be more frequent in, because these longer term trades, sometimes they can take a long time to play out, and we can also take advantage of these smaller patterns as well. So what I mean by that is that if we have a clear 3-touch pattern, let's take a look at this one. 1, 2, 3. We know we have a 90% chance if we break impulsively like this, we'll get to this low. So how do we capitalize on something like that? Well, let's take a look at the 1 hour chart on that pattern. So when we have a structure like this on the 1 hour chart, so this is where it changes. This is still the longer term approach. Now we know that generally when we're taking these trades, we don't like to let them pull back too deeply because we never know how deep the pullback can be. But what we do have clarity in these type of patterns, 1, 2, 3, they have such a high probability they'll get to the low. So that's where your target is. So you get your ray line in, you know your target is here, and when you're taking the trade from the top there, what you're doing is this. You're taking the trade and you're not locking in any profit, any real solid profit, until you're at least at the beginning of this channel here, like this. 1, 2, 3. So by doing that, you're able to see if this is going to break impulsively or not. Now we know that on a daily this broke impulsively, so we have now the 90% probability rule that we're not going to be aggressively managing that. We're going to let this one play out because we know with these patterns, these kind of 1, 2, 3 clear structures, they normally take 2 to 3 weeks to play out. So it's kind of more of a short to medium term hold that you just leave them to play out. And I'm yet to find the ones that don't play out when they've got these clear structures. So they have such a high probability, but we can't always speak in absolutes of 100% because it's never 100%. But with ones like these, as you can see, 19 to 20%, very, very nice trades. You're in them for a couple of weeks, 2 to 3 weeks, and they have such a high probability. So that's the slightly longer term approach that I want to keep in as well, more of a short to medium. I appreciate that some of you will want to hold trades for 3-6 months, you just want to leave them. Some of you will be comfortable to hold them for 3 weeks to a month. On trades like this, I highly recommend that because, 15 to 20% on trades like this. Bearing in mind, we're trading here as well on the Falcon, the normal Falcon strategy. We're trading the hover, we're trading this risk entry, we're trading this risk entry, we're trading the hover here. We're trading multiple times, but we're leaving that one trade that banks us 20%. Think about what that can do for your account. Think about what that can do for your growth just by being semi-passive and leaving it, letting the pattern complete. And I'm going to be here coaching you guys and girls every step of the way anyway, but I want to show you this. The reason why this kind of episode can't be so black and white and straightforward is that we have different variations of patterns, and there's no robotic way to manage these type of patterns because patterns evolve and you need the experience to know how to deal with those, which is what I'm helping you all out on a daily and weekly basis. So guys and girls, that is pound dollar. So USD CAD, pound dollar, as you can see, this one is slightly more complex, but it has so much potential for us to capitalize on. And what we may even be seeing right now is the longer term approach that we can take for this trade to the upside. So very, very exciting times, guys and girls. But now let's show you one more example that I've got on Euro Yen. So if we take a look at Euro Yen here on the daily chart, if you remember this, if you've been in Falcon for a while, you remember us talking about this particular pattern, that there was a 90% probability that this would get to this area here, to this low. There's a 90% rule there. We've been looking at that for a very, very long time. This one, as you can see, pulled back a little bit deeper before it then dropped for the continuation. So how you deal with this type of structure is by understanding where to lock in profit. So when you're taking the trade at the top of the structure like this, likely at about a 30 pip stop, what you're doing is, as a precaution if you like, once you get to the beginning of where this correction is, around this area here, so 1, 2, 3, so the trend line, once you get to here, that's where you lock in your profit. And you have to leave that. You have to let that play out. So these are the type of situations where you'll be in, let's say, 18% profit, and then it pulled back to 7. So as you can see, you need to be willing to deal with those 10% plus pullbacks in those situations. If you're comfortable with them, we know that the majority of the time what happens is, even when it pulls back deeper like this, it's very, very unlikely to take you out if you lock in profit of the channel. So you use the channel as a guide. So let's say you're taking a trade and you've got this type of structure and you're anticipating to get to the low, and you've got price within here, you sold it from here, it gets to this area here, you then lock in profit and you leave it to play out to here. And what might happen is it might impulse down, it might correct back up like this, and you get these kind of moves, but 90% of the time it's going to get to the low, which is a very, very high probability. And in this type of situation, as you can see, this was one we were talking about for months and months that played out. It's more to do with being able to deal with your emotions in that process. You got to remember how we hedge this is remembering that when you're leaving, I mean, there's no risk. You're just leaving these trades open. So there's no need to be emotional, because on the way down, you have to remember we're capitalizing on these trades short term for sells and buys. So we're hedging it the whole way. So even if in worst case scenario, it does pull back a lot deeper and then tags you out for 7% profit, you've still made 7% profit, and everything else that you've made, and you've made sells and buys within here to make profit anyway. But if it goes back a little bit higher than we expected, and then we have to, alter the structure, and then we have to understand that things have changed, then we just understand that not everything's absolute. But just think about even adding those extra 7%, adding those 10%, but you can't be in the mindset of, well, I was running 18% and then I let it pull back to 7. I should have closed that. That's not the mindset to be in with these longer term type of trades, because then you'll just never hold any of them to reach their full target, and you'll constantly be trading it almost the typical Falcon way, and then it's just not the right headspace to be in. You have to look at it from a different approach. I'm really, really excited to be taking these style of trades, because I know from just testing and actively trading that it has the potential to add easily anywhere between 60 to 100% extra to the account. Now, I don't like to just chuck around figures, because we never know exactly what figures that we have, but these are tested. This is just how the patterns play out. So I'm going to personally be having it on separate capital, having those longer term approach. We're going to have variations throughout the year. I'm going to be here, of course, helping you guys and girls out and giving you my perspective of how I'm going to be managing them. So you'll know, right, this is how I do that. And then you're going to learn from that experience. And that is just the best experience that you can get. So then you can hold these longer term. And then what that does is it sets you up nicely in the future to be able to trade the Falcon way with the 1 hour entries, refine it further with the 15-minute entries on one of these episodes, on the quick tips episodes, and actually then combine that with a longer term approach of holding these trades sometimes for 3 to 6 months, and then also the ones that I mentioned on things like pound dollar, where we're holding them for 3 to 4 weeks and adding that extra 20%. It's almost going to be difficult not to capitalize on these trades. So I want you to watch these episodes over and over. I honestly believe that this is some of my best work. This is stuff I've been testing for years and years, and now you're gaining that experience in just a 20 to 30 minute video, sometimes a little bit longer. But as you can see, watch it over and over again, make your notes, don't rush the process, because it really, really can give you a crazy amount of growth. So I hope you've enjoyed this episode. I'm really excited for you all to combine episode 1 and 2 together, because I know it's going to be crazy for you. And episode 3 coming up with go-to setups is going to help you even more. So guys and girls, I hope you've enjoyed it, and remember to watch over and over again, and I would love to hear your feedback.